Hi, this is Don Barnes and
Nicole Davis.
and welcome back to Tax Wars. We've got a very exciting segment that we're continuing on discussing divorce and taxes. Many of you may out there have been through divorce, are going through a divorce, or are thinking about getting a divorce. Divorce season starts in just 6 more months. That's always around between the holidays, the Super Bowl, and Valentine's Day. Believe it or not, that is when most people determine that they're going to get a divorce. However, COVID has changed everything. If you didn't want a divorce before COVID, you most certainly want one now. Okay, I'm not even married and I want one. I'll take 2. Okay, so those are some of the things that we're going to be talking about. On our last episode, when Nicole and I were dining at the Mission Inn and enjoying their wonderful brunch, and we were talking about the innocent spouse provision and the injured spouse provision.
Yes.
We didn't go too much into detail. There's so many things that are involved with taxes when it comes to getting divorced. You have child custody issues. You also have a lot of property issues. Who gets the 401k? Who gets the business? Who gets the cat? Who gets the dog? All this can and will affect your taxes. And whether you are the primary breadwinner, the one who makes the most money, child custody issues can rip everything apart.
Yes.
And it's never good. However, you can win if you know what you're doing and have a good tax professional advising you through the whole process. So one of the things that we get a lot of calls about regarding are issues regarding the child custody and taking the child tax credit. Most people, when they break up, they don't understand this, and many times the children get moved around. Well, she claims him for 6 months out of the year, then I claim him for 6 months out of the year. Or we switch years. She'll claim him this year, I'll claim him next year. And it never works out quite right. However, we often get calls where one former spouse is filed and they took the tax credit that they weren't supposed to, and vice versa. So Nicole's going to explain a little bit about that and how you can work and make sure that you are filing properly and make sure that you meet the means test to be able to take the claim the children as a deduction when you have departed from your former spouse.
Yes, so usually one of the main factors that would allow you to claim the child on your taxes for the year as a dependent would be if you had the child in your care and custody for more than half of the year. So usually you would just count out the days. Whoever had them most of the time would be able to claim them on their taxes. In other cases, there could be a court order in place that states, just like Don was saying, that the mother claims them every other year, the father claims them every other year from there. But if there's nothing in place, then it would just be the amount of days that each parent had the child that would determine who gets to claim them. If there is one parent who is allowed to claim them but decides that they will allow the other parent to claim them, you always want to back that up. So the IRS does offer a form to complete. It's form 8332 that just releases the right to claim the child. So if you're divorced and your wife has the right to claim the child, but she's going to let you claim them this year, make sure she signs that form 8332 and you provide that to the IRS so that they know and you have proof that the child is able to be claimed as your dependent that year.
Okay, fantastic. We're going to wrap things up because we have to get inside the courthouse this morning to handle some things. And we'll be coming back at you with more information regarding divorce and tax.
Yes.
All right? You have a great day.